Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it was very much a havoc morning with the markets plummeting on the Australian dollar, on the Aussie yen and also dollar yen. This is possibly known as a flash crash. You can see here the market plummeted to a fresh 9-year low. This morning the market took out the support of 70 cents and plummeted roughly around the area of 67.30. Elsewhere, it has been reported the market even crashed as low as 66.60. But we don't have this on this platform. So, of course, interbank may have lower Australian prices from this morning, but from what I can gather, the low was 67.30 or roughly around there. Very hard to call when the market is in a sort of a crash like this, but the market did recover quite significantly. Now, I'm not sure if the RBA did intervene. It wasn't confirmed. But nevertheless, along with that, with the shaky economic news out of China and a surge in the greenback overnight gave additional pressure on the Australian pair. Yesterday, the release of the Cajun Manufacturing Purchase Manager Index, or the PMI for December, which declined to 49.7 from 50.2 in November, marking, should I say, the first contraction since May 2017. Economists did poll that Reuters had forecasted only a marginal dip from November to 50.1, just above the neutral 50 mark, dividing expansion from contraction on the monthly basis. But the weaker than expected data follows a poor official survey on factory output, compounding concerns about the possible economic slowdown this year, or should I say in 2018. With the Australian dollar now still holding to a negative pattern, could actually see further weakness into the coming session. Therefore, the immediate support is at 68.70 and could drop towards 67.90 or even to this morning's low, with the support crucial at 67.2040 with the resistance seen at 69.55. As you can see, the euro plummeted overnight and took out the supports all the way down after reaching a low of 113.24. It did print high briefly at 114.96. Now, the catalyst for this was the fact that the US dollar did surge after contesting the crucial level of 95.40. We posted a low of 36 and rebounded to a 2-week high of 96.54 before settling at 96.34. Looking ahead, tomorrow we do have the non-farm payroll report, which is forecasted for 178,000 jobs, and with the average hourly earnings at 0.3%, and also the unemployment still on a 49-year low of 3.7%. Technically, my call is still towards 111.6080, even though the market has had many tests at the high 114s, and from this rejection, a very, very strong outside range day does give further concerns that we could see a further fall in price. Although we have seen a slight recovery this morning, the target at that moment is 112.65, and as I mentioned, down to 111.6080. Well, it would seem with dollar yen also flash crashing, as you can see here, the market plummeted to somewhere around, from what I can gather this morning, of a low of 105.18. It is assessed that the markets, along with Aussie yen, also crushed support levels and fell. If you're looking at Aussie yen, that actually plummeted from 76 down to 70.66. So nearly 6 big figures. But looking at dollar yen, taking out the level of 1.8 overnight does give further concerns. The fact is that I'm neutral and looking for a further direction at this stage. We are oversold though, but the market could still possibly test down towards the 106, 105 region with the resistance seen around 108, 15, 14. Well, there wasn't any real reason for the pound to sell off last night, but it did reject that level again at 127.5 and plummeted to a low at 125.80. It is assessed, though, that the market could actually follow on further and look towards the region of 124 as a target. Any advances sees resistance around 125 to 126. The gold, reaching its target of 1,280, has now posted a doji. Slight hesitant. That means that the market's indecisive whether it wants to take the challenge higher. It is assessed, though, resistance towards 1,297 to 1,300 could draw supply, and also the fact is a slight correction because we are overbought and the ADX is overheating. So I am expecting to see a pullback towards 66.72 and with a cap still around 1,300. Well, after an initial sell-off overnight, the oil actually managed to rally back 3% on news that the Saudis are looking to cut further in supply. Therefore, this could see a further demand in oil and look up towards the resistant line, which was briefly challenged around 48. I do assess, though, the break above there could give a target towards $52 a barrel. Well, that wraps up for today. So, as always, I hope you enjoy the rest of the day and look out for the intro report. And thank you for joining me this morning.